A staggering 200 billion Shiba Inu tokens just landed on centralized exchanges, a move that historically signals a massive sell-off. Is this the end of the recent rally, or is this a calculated trap set by the biggest players? We are diving deep into the on-chain data to uncover the truth behind this colossal transfer. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you wanted to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The crypto market is currently grappling with a massive on-chain event involving Shiba Inu, the transfer of approximately 200 billion tokens to centralized exchanges. This volume, valued at over $1.7 million at the current price, represents a significant movement of capital from large wallet holders, commonly referred to as whales. The context for this movement is a market that has shown tentative signs of recovery, with Shiba Inu defending its yearly low and attempting to break out of a prolonged consolidation phase. The token is currently trading at approximately 853 units, with a 24-hour trading volume of around $142 million. Whale activity, particularly large inflows to exchanges, is a critical metric because it often precedes a price drop, as tokens are moved from secure, long-term storage wallets to exchanges for the purpose of selling. The immediate question is whether this is a precursor to a market correction or a strategic maneuver designed to shake out smaller investors before a larger move up. The core development is the substantial increase in Shiba Inu exchange reserves. As per on-chain data, the transfer of 200 billion Shiba Inu tokens has increased the total exchange reserves to approximately 81.65 trillion Shiba Inu. This is a crucial metric because it represents the immediate supply available to be sold on the open market. This massive inflow occurred over a short period, immediately raising red flags among market analysts and community trackers. Analysts note that this type of large, sudden movement is typically executed by whales who have decided to take profits or rebalance their portfolios. The timing is particularly noteworthy, as it follows a period where Shiba Inu was showing bullish technical signs, including a potential breakout from a falling wedge pattern. The event itself is the movement of tokens from an unknown, non-exchange wallet to a known exchange wallet, a transaction that is publicly visible on the blockchain, but whose intent remains speculative. The sheer size of the transfer suggests a coordinated action by one or more major entities. Despite the massive inflow, the market's immediate price reaction has been surprisingly resilient. Community trackers show that Shiba Inu has managed to hold its ground, with the price remaining relatively stable around 853 units. This is a counterintuitive response, as a supply shock of this magnitude would typically trigger a sharp price decline. The market capitalization remains robust at over $5 billion, indicating that the overall market structure has not been severely damaged. However, the trading volume has seen a slight increase, suggesting that the market is absorbing the selling pressure generated by this inflow. Analysts suggest that the lack of a dramatic price drop could be due to two primary factors. First, the market may have already priced in a degree of whale profit-taking, and second, there may be significant buying demand waiting to absorb the tokens as they hit the market. The key takeaway is that while the inflow is bearish on the surface, the lack of a corresponding price crash suggests a deeper, more complex dynamic at play. The on-chain evidence presents a mixed yet fascinating picture. While the 200 billion Shiba Inu inflow is a clear bearish signal, other on-chain metrics suggest a strong underlying accumulation trend. Sources suggest that in the 24 hours immediately following the inflow, there was a net outflow of approximately 19 billion Shiba Inu from exchanges. This exchange exodus is a powerful bullish signal, indicating that while one whale may have deposited tokens, a larger number of smaller whales and retail investors are actively moving tokens off exchanges for long-term holding. This suggests a battle between short-term profit takers and long-term accumulators. Furthermore, analysts note that the token's price has successfully defended its 25 low of 758 units, forming a bullish engulfing candle on the daily chart. This technical defense, combined with the net outflow data, suggests that the market is successfully absorbing the selling pressure from the 200 billion Shiba Inu inflow, turning a potential disaster into a display of market strength. The implications of this whale activity are centered on market manipulation and the battle for control over the short-term price action. Analysts' opinions are split. One camp views the 200 billion Shiba Inu inflow as a clear signal of impending sell pressure, suggesting that the whale is preparing to dump their holdings, which could push the price back down to the 758 unit support level. The other camp views this as a calculated bear trap. Expert commentary suggests that the whale may be using the public visibility of the transfer to induce panic selling from smaller investors, allowing them to accumulate at lower prices or to set up a short squeeze. The fact that the price has not collapsed and that a net outflow of 19 billion Shiba Inu followed the inflow lends credence to the bear trap theory. The primary implication is that the market is at a critical inflection point where the actions of a few large players are attempting to dictate the narrative, but the broader market is showing resilience and long-term conviction. The Shiba Inu community, the Shib army, has reacted to the news with a mixture of caution and defiance. Social media platforms are filled with discussions about the whale transfer, with many community members urging others not to panic sell, viewing the inflow as a temporary scare tactic. Community trackers show that the overall sentiment remains positive, largely buoyed by the recent technical defense of the yearly low and the ongoing development of the Shibarium ecosystem. Developer hints continue to focus on the utility and expansion of the Shiba Inu ecosystem, with no direct comment on the whale activity, maintaining a focus on the long-term vision. The community's response is a crucial factor, as their collective refusal to sell into the panic created by the whale inflow is what is currently preventing a major price collapse. This strong community support acts as a psychological buffer against large-scale market manipulation. The forecast for Shiba Inu is now heavily dependent on the fate of the 200 billion Shiba Inu tokens on the exchange. In the short term, 1 week, 1 month, the primary level to watch is the immediate resistance at 880 units. A decisive break above this level would invalidate the bearish signal from the inflow and confirm the market's strength. Conversely, a sharp increase in selling volume that pushes the price below the 800 unit mark would confirm the whale's intent to sell, and likely lead to a retest of the 758 unit support. For the long term, 3 months, 3 years, the forecast remains cautiously optimistic, provided the market successfully absorbs this supply shock. What to watch for is the continued net exchange flow data. If the net outflow trend continues, it will confirm that long-term holders are dominating the market, setting the stage for a sustained rally. If the 200 billion Shiba Inu are sold, the long-term outlook will depend on the speed of recovery and the continued adoption of Shibarium. A balanced opinion dictates that the 200 billion Shiba Inu inflow must be treated as a significant risk factor. The primary cautionary point is that the tokens are now in a position to be sold instantly, creating an overhang of supply that could suppress the price for the foreseeable future. Red flags would include a sustained period of high selling pressure, particularly during Asian trading hours, which often see higher volatility. Neutral insights suggest that this event is a test of Shiba Inu market maturity. If the market can absorb this massive supply without a major crash, it demonstrates a level of resilience and liquidity that was previously absent. The risk is that the whale's intent is genuinely to sell, and the market's current stability is merely a temporary pause before the dump. Therefore, while the on-chain accumulation is a positive sign, the immediate threat of the 200 billion Shiba Inu remains a critical factor that investors must monitor closely. The whales have made their move, dropping a massive 200 billion Shiba Inu on the exchanges. The market is holding its breath, waiting to see if this is a calculated sell-off or a brilliant bear trap. The next few days will be a true test of Shiba Inu resilience and the Shib army's conviction. Keep a close watch on the net exchange flow. Don't let the fear, uncertainty, and doubt shake you out of your position. We will be here to break down every move. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.